Good morning, afternoon, or evening, Cryptonauts. Welcome back for another YouTube video. I am All in Crypto, and today we are going to be delivering another daily cryptocurrency market update. As always, there's a lot to cover. A lot has gone on over the past 24 hours, whether that be intrinsically within the crypto space or more sort of macroeconomically. Obviously, we had the rate decision yesterday where they decided, as we expected, not to raise rates. However, Jerome Powell really threw a spanner in the works with this whole skip narrative that we've spoken about. We'll look at this because on the face of it, it doesn't make a great deal of sense to skip this month but maybe hike next month. Why would you do that? Certainly given the context of a lower inflation, and we think inflation is around about 2.4% in actuality, where the CPI is, in America this is, in Great Britain it's a lot higher, Europe it's a lot higher, etc., etc. But in America, we think it's a lot lower than what the CPI is at. You've got continued stress in the banking sector. You've got real issues with the bond market, which the Treasury Secretary is looking to hurt even more in regards to raising yields and dumping treasuries. And you've got them continuing to roll off their balance sheet. So why the rhetoric about we see appropriate, pretty much all committee members will play the clip just the start of the FOMC, are in agreement that they go ahead and do another two-ish rate hikes was the consensus. Why skip now? Now, I think this is a bluff. I really do. I think there's a lot going on, and we'll cover it all. We're also going to be looking at a number of interesting things in regards to Blackrock, Fidelity, and Bank of America all having increased in Q1 2023 their MicroStrategy shares significantly. This hints at them wanting to gain exposure to Bitcoin. We'll look at Bitcoin technically because we still absolutely believe that you are in a bull market now for Bitcoin and the total cryptocurrency market cap. Altcoins, of course, some of them have gone on to put in new lows. So we're not quite there yet. We do think that turning is literally here. You're basically where you were in January where we started buying. And ultimately think that the broader markets like the stock market, gold, and the dollar are really kind of lining up in regards to the direction that we've thought they would. It's just the altcoin market that's been a little bit more turbulent, as we probably should have all expected, being very low cap at a time where not many people are interested in the crypto space. The cryptocurrency market is really suffering right now, or the altcoin market, from a lack of interest. There's good and bad news there. Actually, typically, you want to be interested when no one else is, like we are. And we try and keep everybody sort of focused on that on a daily basis. And then you want to be a little bit more cautious when everybody's piling in and you've got all your relatives ringing you up asking you about this weird and wonderful thing called the cryptocurrency market. So let's dive into it all, guys. Let's really start off by looking at the broad market. So we had Jerome Powell's speech yesterday. And of course, since then, you've seen quite a heavy sell-off for the altcoins. Now, the altcoins, and we'll use Total 3 as a barometer for the altcoins, has really got hit very hard. We were looking at a number of things. Quite a few people have looked at maybe a bear flag-like situation. I find it unlikely at this stage in the game. The targets, if you did have bear flags on the likes of Bitcoin, you'd have some pretty, I think, unreasonable targets to the downside from that. So we don't think a bear flag is particularly prominent in the likes of Bitcoin. We think that you're more moving towards a kind of double bottom scenario. We know the story with altcoins and what's happened with the SEC. It's unfair. We made a video. We made a number of videos actually saying that there's a lot more here than meets the eye. These individuals aren't incompetent, right? They may play dumb to the masses, but that's so they can avoid some level of accountability for the destruction that they're causing. They will have already set out a plan for crypto, and actually what they're doing, whether it's Choke Point 2.0 or whatever it is, likely, it is working towards an end goal. This space isn't going anywhere. Yesterday, we looked at the World Economic Forum's post in relation to, it was a white paper on global crypto regulations. Of course, we know Klaus Schwab, big fan of Lenin, apparently, Klaus Schwab. His organization very much are a very prominent organization in sort of working things out. So I will go into the technicals for Bitcoin. I really want to reiterate this kind of inverse head and shoulders that is very present And actually 25k was always a possibility of coming back and retesting. Now you've stopped slightly below it, you're sort of hovering around it. We'll see what the next action is. There could be on this low volume a little bit more downside. But ultimately we do expect within this region support to come in and for this kind of a scenario to play out. Kind of like what we looked at with Microsoft. But let's talk about Jerome Powell's speech. Of course, this has impacted the markets. We've said for a long time that they weren't going to hike in June. The call was largely against us for a while in terms of probabilities, but we've always stuck to it. And I think the reason we've got this call right is because we've understood the situation. We've looked at inflation. We expected lower inflation. We've looked at the jobs market. We expect that to start waning. We've looked at the housing market, so on and so forth. And ultimately think that the reasons why they hiked are still somewhat here, but to massively less of a degree than them having the reasoning to go to 5.25%. Depending on what you think the neutral rate is, I think if you can tell me what the Fed's neutral rate is in the comment section, let me know. I work out the neutral rate via where's inflation, where's the Fed fund, and now it's in restrictive territory in regards to inflation. But let's take a look at the first few minutes of Jerome Powell's speech, because this is really what's causing the problem, the uncertainty in the markets.
My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5 percentage points, and we've continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. In light of how far we've come in tightening policy, the uncertain lags with which monetary policy affects the economy, and potential headwinds from credit tightening, today we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Looking ahead, nearly all committee participants view it as likely that some further rate increases will be appropriate this year to bring inflation down to 2% over time. And I will have more to say about monetary.
That's the spanner in the works there, guys. Because markets do not like uncertainty. We need something to go off of. I think they're bluffing. I think they can't just come out and sort of give everything a green light. Part of their monetary policy is through communication with the markets, with these meetings. Now, there's a multitude of reasons why I think they can't continue to raise rates and won't. One of the big ones is the stresses that we see on the banking sector. We're seeing real stresses on the banking sector as a result of all banks holding bonds and treasuries, them getting dumped and no bid for them. We're seeing yields go through the roof. We're seeing a big uptick in yields. Yield and bond market is the market to watch, ladies and gentlemen. Ultimately, we need to see this role to kind of fulfill more so the narrative that we have. Okay, so I don't think they can continue to raise rates and continue to put pressure on the bond market with this as an issue. I mean, you're losing in regards to yield at the moment. So there's going to be this big swing back and push back from this uptrend that has been the yield market. But I really don't think Jerome Powell's in a position, or the Fed, as an armchair economist, I'm saying this, by the way, guys, to continue tightening when certainly we have inflation going in the right direction. It doesn't seem like they need to do that. And him saying, oh, well, all members do see further rates are likely appropriate, that's left markets in a grey area because, are they now going to skip this one but up in July? I mean, that makes no damn sense to anybody. Why would you not continue to get the job done? It doesn't make a great deal of sense. It's going to be very interesting to see how the US market opens up today. You can see that futures are significantly down. We've got gold down. We've got the dollar up. We do think the dollar is set to roll, guys. We have been looking at the death of the dollar, which people go, oh, no, the dollar won't die. It will and has been over time. It is really just a matter of time. But if you look at where the sort of stock market is, I mean, the stock market's had a great run. You know, this was all very predictable. We still think the stock market is going on and going to put in new all-time highs. Remember, we've looked at Fed funds going sideways and the implications that has on the markets. We think the same thing is going to play out. It may not be all of a sudden everyone's watching the same thing, and it may take, you know, look at this, for example. You have some kind of a, you know, the high rates, then you roll, and then the real run starts. So there might be one final little downside, maybe in regards to the S&P. That could come in the forms of a retest. So maybe you do something like this and retest it. Remember, the cryptocurrency market, due to a number of factors, one, of course, being the SEC and the whole lawsuit, hasn't been basking in the same sun as the stock market, the S&P, kind of like what happened with FTX. However, when this started to roll and you could get some sort of a retest here, very common you get a retest, then ultimately Bitcoin at that time was doing quite well. So we'll see what happens. I think Bitcoin could, and crypto generally, could just have this kind of consolidation period now. You know, this is ultimately what we have set up, not just for the S&P, but for the stock market and Bitcoin. This is the structure that you're in, guys. This is your head and shoulders. This is really what we're looking at. See if we can get these up together. This, of course, is Microsoft. We think that the stock market's going to do the same thing. It's going to have pullbacks. Look at where you are. You're at localized high. You've got new all-time highs coming up. Price discovery can be extremely volatile. Gold's taking a little bit longer out of this bull flag to really get rocking and rolling. We do think it will. We've also got a lot to cover in just a second, guys, in regards to BlackRock, Fidelity, etc., etc. But stay tuned. Bitcoin's very much doing this, broken out of the head and shoulders, now coming back to retest, and then we see that continuation. Yeah, okay, it's dropped just below 25k, but this is your range where you essentially bounce and look for that upside. If you want to find out more and get more timely updates, guys, please do consider joining the Patreon. But this is what we're looking at for, essentially, and this has got targets of 40k. This is where Bitcoin's going. In my opinion, Bitcoin is out of a bear market. The only assets that we look at right now, and it's not all of them, but some altcoins are still in bear markets because they've gone on to put in a new low. Technically, that's still a bear market. You can't call a bull on that. But Bitcoin, the total cryptocurrency market cap, you could even argue the total 3 that didn't actually go on and put in a new low, but certainly the total 2, Bitcoin, you are in a bull market, in my opinion, generally for the crypto space. And also the stock market now. Officially you are 20%. Gold, so on and so forth. The only thing that's playing and being a little bit sticky is altcoins that are very small at a time period in terms of market cap and liquidity at a time period when no one's really that interested. No one's interested in crypto right now. Go and look at Google searches. You should be interested. You're looking a gift horse in the mouth. Actually, I do genuinely believe that you may be thanking Gary Gensler 6 months, a year down the line. We will see. Wouldn't that be a sight for sore eyes? Maybe I'll swallow my words on that. I don't know. But ultimately, we still assess everything's fine. Jerome Powell has thrown a spanner in the works. I don't think he can continue to up rates at this sort of situation. It doesn't make much sense, does it? Really? And we are going to see a huge, in the same way we've seen huge swings towards the yields, we're going to see huge swings towards bonds, potentially. Not in the same degree people might think, though, because bonds have been downgraded across the board. Of course, you've got Robert Kiyosaki, forever a doomsday guy. He will be very right one day, by the way. I think Robert's great. I understand the criticism that he gets in regards to he's been predicting crash for years and years and years and years and years. We know. But he's wrote some great books about very true things. And you've got to appreciate him for that at least. So more banks to fail. Rumour is mortgage giant loan Depot is on the ropes. Regional banks and mortgage companies are failing. Please be careful. I will not believe anything Pres Biden, Fed Chair Powell, or Secretary Yellen say. Think for yourself. You cannot trust your government, ladies and gentlemen. If you take nothing else from this video, take that. That you cannot, your government is not your friend. Your government does not serve you. They work to extract from you and twist, divide and conquer to get what they want and to fill their agenda. You want any more proof on that? Go and look at the statue behind Klaus Schwab and go and study what happened under that individual and his whole ideology. Throughout history, you can see this crop up. Don't want to go down that deep, dark rabbit hole. Something I'm passionate about. At the end of the day, I like you guys. I really want everyone to be on the right side of things. Again, while Powell is serious, reporter, what do you think about the projection of a $51 trillion debt by 2023? People don't realize just how severe that is, right? We're already at $1 trillion in terms of payments. And actually, just I think it was entitlements in the UK, by 2050, it will be 100 and something plus % of GDP. This is when we end up in UBI. UBI, okay, I know people think it's great and this, but people are already very lazy, right? They become a lot less lazy. You destroy entire industries like the hospitality industry, for example, because people won't be able to get workers, because why would they go to work when they can get paid? So on and so forth. I don't want to go down that whole route. There's a million other reasons. One of the main ones being that you become completely dependent on your government, which I think is a very bad thing. And actually, one of the symptoms we suffer in the world right now is an overdependence on the government. It's why we initially got into Bitcoin and crypto. So, Powell, that's not our problem. My job is to remain independent. I know we're on an unsustainable fiscal path, but that is the Treasury's responsibility. Reporter, would you finance that huge debt issuance? No. Good luck. There's an eventuality with the system and the dollar that could be here a lot sooner than people think. And ultimately, crypto really challenges that and provides an alternative. And that's why it's had a lot of kickback. Everything the SEC is doing right now makes no sense. There's no transparency. There's no clarity. This is why they've gone to the courts to try and work it out and power grab. And ultimately, it's one of the biggest load of BS that I've seen in the crypto space thus far. More so than a lot of what China's done over the years in regards to crypto and Bitcoin. Because at least they've given clarity. Let's move on. I still think you're going to have quite a few funds and people that hold Bitcoin and crypto looking to get out of it. Coin shares continue to see 8th consecutive week of outflows. You can see here, pretty significant, Grayscale, so on and so forth. These funds are going to have to adjust, likely sell spot. It's all impacting the market. Today, you may have a bit of a week off the back end of everything. Crypto kind of projected what today perhaps would be like for the stock market, but we'll see what happens when it opens. Nvidia going crazy, that's likely to pull back at some point. You've got, you are at some interesting points here for the stock market. This has killed it. We told people don't short this. It's frustrating that the one market that we didn't see more upside on was the altcoin market. But it will get there. Have faith. Moving on to this was a great thread before I love and leave you. Did you know that and shout out to Bitcoin Culture, very small account, by the way. This was a great thread, very long. I'm not going to read all of it. So I'll repost it on my Twitter. My Twitter is @RealAllInCrypto for anyone who wants to go and follow me. @RealAllInCrypto, spelled exactly. I'll show it in a minute. But did you know that while the SEC is busy suing Binance and Coinbase, BlackRock and the biggest banks in the United States silently bought record amounts of Bitcoin? Well, they didn't buy Bitcoin, they bought MicroStrategy. These banks buying BTC in Q1 include BlackRock, Bank of America, and Fidelity. We've already said this. We've already also really looked at this in regards to the case for an ETF and why it would be such a big deal. We looked at gold's initial ETF in 2004 in America. It was 2003 in Australia. And then, of course, 1993, I think that's right, for the S&P. So what do they know? Thread. Look at the largest holders of MicroStrategy stock. We can see some big banks have huge amounts of MicroStrategy in Q1. Yes, that's the same MicroStrategy that is the largest institutional holder of Bitcoin. This is incorrect. The United States government is the largest institutional holder of Bitcoin, FYI. This makes us wonder. BlackRock Funding Advisors, stakes 6.2%. You've got the Vanguard Group as well, and you can see shares bought 10,000, just a massive jump in regards to this. You've also got Bank of America. Again, shares increase, significant. Then you've got the likes of Fidelity, huge increase. You do have the likes of Morgan Stanley taken off the table, but you can see there's some clear interest here. Why is that? So moving on, and we'll leave it at this. So with the recent SEC lawsuit and Operation Choke Point 2.0, why are these banks buying stocks correlated to BTC price, considering there's no ETF in the US? Buying MicroStrategy is the easiest way. Okay, yeah, let's dive deeper. Bank of America have increased their exposure to MicroStrategy by 47,000%. in Q1 2023. Bank of America is the second largest bank with a market cap of 233 billion and over 3 trillion of AUM. Now let's look at the world's largest asset manager with over $10 trillion, which of course is BlackRock. Also adding, it then goes to talk about a $700 billion bank that essentially is predicting $100,000 Bitcoin. We can see it. We honestly think, and there's not a shadow of doubt in my voice when I say this, that the markets are going to do well despite everything, despite all the gloom and gloom. We think the crash comes later on. This is the only way we fundamentally agree with the bears. I think the bears have a lot of merit, but I think they're wrong. I think they've been wrong on Bitcoin. They've been wrong on the stock market. Slightly right on altcoins, but not really because we're back at January's lows. So let's just chill out a little bit on the I told you so's because it's not really. Ultimately, we think that this market is destined for more upside. And the fact that you've got the likes of BlackRock, Bank of America, and Fidelity buying MicroStrategy to gain exposure to Bitcoin, it's quite an encouraging situation. But Bitcoin, this is the plan. This has always been the plan. Stick to it. Is very much just doing what we've set out for it months in advance. Altcoins are getting thrown around. There's not a lot of liquidity there. That can work to both the up and the downside. I do think you're going to have a real scoop to the upside eventually. Once all the fear, the FUD, and everything's kind of washed out, remember there's a silver lining with regulatory clarity, and that is that it can turn and actually work in your favor in the same way that it works against you. That was a comprehensive daily cryptocurrency market update video, guys. Please like, share, and comment. And if you want to check out my Patreon and find out more about what I'm buying, where I'm buying, and get more regular contact with me, please do consider joining the Patreon. Enjoy your Thursdays, guys. See you in the next YouTube video.